Hi there, I'm João, Lima, editor of The Economy, and here with me I've got Tate Cantrell, CTO of Verne Global. Hi Tate, thanks a lot for talking to me.
Hi João.
There's a lot of conversation around financial markets or how new technologies are going to be used by the financial organizations. What does the financial infrastructure look like in today's market?
Well, data centers for financial industries have certainly been around for decades, but they've typically been focused in the financial centers such as London, Frankfurt, Hong Kong, New York, places like this. That's traditionally where infrastructure has been for financial services industries. And the honest truth is today it's still very similar to that. But we're seeing that there is a change coming where financial service industry, pushed a lot by fintech technologies, are finding that it's actually beneficial for many of the applications not to be at exchange-based data centers, and that's for both cost, latency, and security reasons.
Okay. So when you mention new applications, for example, I believe there's blockchain, all these sort of new trends coming out around. Where does HPC come into this, for example? Because HPC is going to be a main driver and the main way of actually holding the data and hosting the data and analyzing the data.
Well, HPC, high-performance computing, as I think about it, has really been around for a couple decades in the financial services industry, primarily focused, I think the name was grid computing. And so grid computing is just a way of thinking. It's one type of high-performance computing. But that stated, there's a lot of regulatory requirements that are coming out from the Basel Committee, from the Federal Reserve, from MiFID II, a lot of things that are required to do, best case practices to ensure that there are no risks associated with the trading desk. And so all of the trades have to be looked at in a very high intensity manner to test out what are the possible disruptions on the market could mean to the financial reserves for a particular bank or other kind of service.
Okay. And sorry, were you going to say anything else? No. Okay. And then there's actually an interesting thing that you just said there. So the trade desk, a lot of the focus has been on the trade desk, but not on the overall financial perspective, especially when it comes to artificial intelligence or machine learning. How do you think artificial intelligence is going to change the whole landscape? And I know Verne has been very involved in this sort of discussion in the industry in the last couple of months.
We have been, yeah.
Yeah. So what's going to be the future look like? What's the future going to look like when it comes to artificial intelligence?
I think if you look at the tradition of market intelligence and low latency trade applications, it's always been focused on the answer and how quickly we can get to the answer and what that trade's going to be. And I think machine learning, my personal philosophy on this is that machine learning, deep learning, everything associated with artificial intelligence will be more about the questions, about helping us to ask questions that we wouldn't have otherwise thought of. And I think that's going to be the big change for the financial service industry. And it's one of the reasons that the compute requirements are really going to skyrocket. Because once you start having the ability to ask new questions, to be challenged to think about new ways to go for trading strategies, for new ways to analyze whether your model is going to work correctly on the next day's data, all of that is a very useful way for the financial services industry to really create a differentiator, and that's what it's about. It's about a new competitive landscape where it's not just who has the best access to the exchange. It's who's got the best resources, the best engine to create that strategy for trading. And as the end user, as the person who is putting their resources to work within a financial consultancy, financial institution, that's what they really want. They want differentiated services, and I believe machine learning for the industry is going to serve a great purpose in that regard.
Okay. But we're still a bit of the infancy of this technology.
Absolutely. Verne actually hosted a roundtable recently. My colleague Steph Vagels helped to put that together. And what we heard resoundingly throughout our colleagues in the industry is that it is, just as you say, Joe, is the industry. We're in the infancy of machine learning in the financial services industry.
And actually, one of the most amazing facts that came out of that discussion was a very basic fact, which is we don't even know what to use this technology for. So again, what sort of main applications do you see this being used for in the financial sector?
I think the first one, the obvious one, is the fintech group. I mean, the ones who are pushing technology into financial services are going to make the best use case out of it. But also, there's certainly a lot of development in blockchain. But I think specifically in terms of where machine learning will be used and is used currently, it's in the trading strategy.
Okay.
How are we going to execute and change our trading strategy over the next day, over the next weeks, over the next months? That's where by using deep neural networks, you can really get that continuous feedback of whether you're having a successful strategy. You can use historical data to test those algorithms, and that will be the area where I think we're going to see the immediate drawdown. And as these companies are successful using these types of technologies, their data center requirements are just going to increase.
Okay.
And I think that's where Verne comes into play, because we have the ability to serve a growing someone who has a growing data center footprint. Is using high-performance computing to further their successes. They don't want to see the expense line grow as well, and that's where we can help.
Okay, and then I'll go into the compute power a little bit in a
Sure.
second. But looking at the neural networks, do you think this industry understands enough of this sort of topic, or do you think there's still some barriers into the adoption of it? Because one of the key notes that came out of your roundtable as well was around the need to have neuroscientists explaining what this sort of technology can do and how to mimic the brain.
Sure. I think there's an amazing amount of development that can go on across all industries in terms of the adoption of neural networks. There's even institutions that are dedicated to improving the way that we train these deep neural networks. I went out and met with some colleagues at a group called OpenAI,
Yes.
and they're 100% focused on furthering not only the research but also the legal framework associated with the tough questions that are going to come out of AI. So the answer is yes, but not specific to the financial services industry. Artificial intelligence does need to continue to grow, but look, I took classes on deep neural networks in the mid-90s. I mean, at university, so they've been around for a while. Artificial intelligence has been around even longer, and yet we still don't completely understand it. But what we do know is that if you have enough compute resources and you have enough data, goodness knows the financial services industry has a lot of data. If you have that data and you train your algorithms, you can get some amazingly new intuition about the information than you ever really have.
And actually picking up on your experience then, if you studied neural networks in the 90s, how has the industry changed over the last couple of years? I know there's a lot of hype now. Was that hype in the 90s as well? How has it changed? Can the technology even change around the years? So what's been the transformation?
So I think the transformation now is primarily driven by image recognition. Autonomous driving is an example of an area where people see that, hey, there's advantages to being able to detect edges in images. So there's a lot of research that's ongoing just because the mother of invention is necessity, and there is a need to be able to rapidly deploy these neural networks within automobiles or autonomous driving to be able to detect these images in new ways. So there is a lot of focus on the training and retraining of those specific types of algorithms, and all of that technology is actually beneficial to the types of training models that the financial services industry would have. So I would say that while the big push has been on the hyperscale compute, the Googles, Facebooks, Apples into the game, all of that is going to benefit the financial services industry. Let's just look at the types of compute that the financial service companies are starting to look at. They're looking at GPUs, general purpose graphical processing units, like they never have before. Typically, historically, they've done their simulation software, their modeling software on just typical x86 types of CPUs. We're starting to see that change. And I think that's primarily driven by the adoption that the entire industry has given to machine learning.
Okay. And then picking up on blockchain, for example, the new hype, IBM has said this is the third biggest thing for them now after cloud and Watson cognitive computing. What do you think about blockchain? What's going on with blockchain in the financial sector?
Well, I think
there's a lot of money being poured into it.
Yeah, I think it's a fabulous technology, and I think for me, what I see is the concept of a distributed ledger. There's so many things, all the way from securing personal identity to securing financial transactions. There's so many applications. Health and human services, financial services. I really believe that this is it's a great technology that's not just limited to what everyone thinks of, Bitcoin. I think there's just tons of applications, and I'm really excited to see what's been created here. I think over time you will see that we might even be competing to store history itself within the infrastructure of blockchain. That's more of a futurist point of view.
Okay. So you mentioned compute power, and we know these sort of technologies, high performance computing, artificial intelligence, machine learning is going to put tremendous pressure into the infrastructure, not just data centers, the whole of the infrastructure. What are infrastructure players doing right now to cope with this tremendous pressure?
Well, the truth is a lot of them are not doing enough. Most of the co-location players are still in the larger cities. They're still near the financial centers because traditionally that's been where the demand has been generated. But if you look at London, for example, there is a gap between the amount of power that wants to come on to the grid and the power resources which are there. And Verne Global actually did a study which we call Mind the Gap, which addresses just this. I mean, I think this past year there were times when the UK grid was actually oversubscribed. And that's just because there's not enough generation resources within that environment. So if you continue to add pressure within those overused resources, you're really going to have problems. And just to put things in perspective, in London, there was 50 megawatts of data center capacity brought into a grid that's already overpressured. And so I think what the question should be is, what will they have to do about it when they reach the point where they're unable to sell additional capacity? And that's where companies like Verne Global and other data center companies that are looking up into the Nordics, where there is excess power generation capability, and by the way, 100% renewable, which helps, which is important, and especially for financial service companies, because one of the white papers which we just released with a consultancy called City Hub says that 25 to 30% of the greenhouse gas emissions for financial service companies comes from their data centers. And so that means that if the companies chose to move their compute from exchange-based locations to locations such as Iceland, where you can really be able to develop your expansive portfolio of compute, you would save greenhouse gas emissions and you would save cost, because it's much cheaper to do data centers away from the exchanges.
But how would you answer the critics that say Verne is based in Iceland, there's a lot of volcanoes in Iceland, a lot of people talk about that sort of thing, like if a volcano goes off, the data center might be in danger. What do you have to say to the critics about that?
Well, I would say, first of all, we knew about every data center that's installed has risks. And so one of the things that Verne Global did to mitigate against the risks that might be within Iceland is we actually located our site on an ex-NATO air base that's been operational for the last 50 years. And we wanted to ensure that we took advantage of that site selection criteria. But we also dealt with it with our engineering designs. We have sealed buildings where we recirculate air. So regardless of what's going on outside with regard to air quality, we're 100% safe. But I think the larger development in the financial services industry and elsewhere is that you can actually create location resilient applications. And what that means is that if a financial service company is doing a Basel III analysis of its books, they should have and will have built into that the ability to operate that within multiple locations. Their primary location should be a location where it's green, it's low cost, but if they're going to be successful, they should always have a secondary and a tertiary location. Financial services industries really lead the way with that kind of geographic consideration.
And then broadening a little bit out of Iceland, so into the Nordic space, do you think it'll be wise to get most of these data centers in the Nordics to serve the financial institutions in Europe? Is that something that will happen, or is it just a wish of Nordic companies?
Well, I think it will happen as long as the companies who operate within the Nordics actually tailor their services to meet the needs of the financial service companies.
Okay.
Financial service companies are traditionally, based on my experience, one of the toughest customers you'll ever have. And by tough, I don't mean bad. I mean tough like they're going to challenge you to have your security right. You got to have physical security. You got to have logical security. You need to have dependable services all the way through. And not only that, you have to be knowledgeable about the type of business that they're doing. And that's an area where we've chosen to focus. I mean, financial service industry is very important to the business of Verne Global, and we're dedicated to serve the industry.
Okay. And then what can we expect from Verne in the next couple of months? So the next 12 months, what are you going to do? Are you going to expand? You're going to raise more funds to expand?
Well,
what's in the pipeline?
we have plenty of funds available to expand currently.
Okay.
We have continued to build excess capacity, so we have the ability to take customers now. For us, what we're trying to do is continue to build our ecosystem of partners. And specifically for the financial services industry, we want to be able to have, whether it's a single rack customer or even maybe an as-a-service customer to do financial analysis, risk analysis as a service. We want to have those kinds of services within the Verne Global campus, just to make it as easy as possible, whether somebody wants to go from a single server all the way up to a dedicated 1-2 megawatt suite. We want to have that available within our campus. So I think the answer is, what will we continue to do will be just to strengthen that ecosystem that serves the financial industry.
Okay. Could we see Verne coming out of Iceland one day into another location?
For us, the most important thing is servicing our customers, and we're already doing that with the networks that we're building, and so what we do for our customers is we will go to meet them wherever they are, to make sure that there's a secure connection to the best location for compute, and that won't change.
Okay, Tate, thanks a lot for talking to me.
Thank you.
Don't forget you can follow Data Economy on Twitter, Facebook and LinkedIn, and also visit the website on www.data-economy.com.